Okay.
Yes, sir, we can start.
Good evening, all, to the third day of our fourth day webinar on GST. I extend a warm welcome to all the participants and as well as to our dear Raghuraman sir, who has agreed even for a low participation. Mr. Ramaguti, go ahead, I will be with you. So my special thanks to Raghuraman sir on this. And now I am straight away going into the today's topic. Today's topic is mainly on the ITC part, but first I have requested him to deal with the recent three Supreme Court decisions on the time bar aspect or the time limit aspect, and it is made applicable to quasi-judicial authorities also. We are all experiencing that rejection, and now with the Supreme Court decision, all will have a solution. So sir will start with that. Then he will go into ITC, where the complexities are coming with regard to indivisibility of the contract, indivisible works contract, and the ITC on the machinery or on the lift or on the duct AC, etc., which are little complicated. That also we need to know whether it is possible to take or not. So Raghuraman sir will address it. Now I am requesting Mr. Anthony Sebastian to introduce Raghuraman sir.
Thank you, sir. Dear all, today we have a unique personality as speaker, Advocate V. Raghuraman, sir. About academics, qualification, BCom, FCA, ACS, LLB, ICAA. Achievements, first rank in BCom, 38th rank in CA Inter, 24th rank in CA Final, second rank in ICAA, 25th rank ICAA Final. Professional, practicing as advocate. I need to say the best advocate. 30 years as CA and advocate. Specialization, GST, excise, customs, service tax, foreign trade policy, FEMA. Advocate Raghuraman is specializing in indirect tax planning and litigation, appears frequently before courts. He is a visiting faculty at Indian Institute of Management, Bangalore, CA Institute. Had addressed large number of seminars and published several papers in national magazines on GST, excise, customs, service tax, FEMA. Was member of the Indirect Tax Committee of the ICAI New Delhi during 2014-15. We all know that authoring a book is one of the toughest tasks. And our speaker, Advocate Raghuraman sir, has authored 2 books, Landmark International VAT Decision and its relevance to Indian GST, published by International Publishing House, Walters Kluwer. The second book, GST and Indirect Taxes Principles Demystified, published by International Publishing House, CCH. We all are very glad to have you here, sir. Over to you, sir.
Thank you. The Association of GST Professionals, a brainchild of all of you, especially when Mr. Ramankutty, who I'm sure is behind this noble initiative. I've been, when I was approached to take this session, I was only too glad that I should be helping somebody who's known to me for several years and who's been one of those professionals who have taken a very keen interest in indirect taxes, who has dealt with it for several years, decades, I would say, not years, and has been practicing this. And at the age of 70, 71, he has been able to, he wants to achieve so many things, which is inspiration for all of us here, because we may not be thinking on the same lines sometimes, but we are so glad to see that he's at this age thinking of making the Association of GST Professionals as a very, very big forum. And I think that should be encouraged, and we should have this association of GST professionals having membership of sizable amount of people, and we will always from our office try our best to do whatever we can to help this association to grow. Having said this, the topics that have been selected have been carefully selected by Mr. Ramankuti. The first topic itself is about the order on COVID, the limitations which have been prescribed. We have two types of orders that are happening. One is under the relevant section 168A of the CGST Act. Similarly, under 119 of the Income Tax Act, we have had extensions happening from time to time. 168A, in fact, was introduced specifically for these kind of issues, COVID, epidemics, force majeure conditions. To take care of that, 168A was introduced in the CGST Act, and from time to time, the department has been extending the time limits prescribed under the Act, which we shall see in some time. Parallelly, if you look at it, it started with the Supreme Court, who found that the litigant public as well as the government both were struggling to file appeals, applications, suits. And what happens is, in certain cases, especially if you were to take arbitration cases, check bouncing or negotiable instruments matters, and insurance matters, time limits had to be adhered to under the statute. If this time limits for filing replies or filing appeals is not adhered to under the statute, the late filing will cause the appeals or the applications to be dismissed outright. Because there is, as you see in our GST Act also, there are provisions which say that beyond a particular time limit, you cannot file appeals. In the sense, condonation power is not vested with the Commissioner Appeals, for example, the first appeals. And 107, he has a maximum X period, 3 + 1 month, that's it. Beyond 4 months, he cannot condone the delay. So he normally, if you file an appeal after 4 or 5 months, he will dismiss it as being time bar. Okay, it's another thing that we go to the High Court and then we will, invoke its extraordinary jurisdiction under Article 226. But that is a different issue. To obviate these problems, the Supreme Court thought it fit on 23/3/2020 to make an order. The first of the orders was that they took suo motu cognizance. That means to say there was no complaint of so and so or petition filed or any such thing. So the Supreme Court decided that they will take suo motu cognizance on account of the COVID-19, and they categorized petitions, applications, suits, appeals, all other proceedings. Very important for us to know: petitions, applications, suits, appeals, all other proceedings. And said that the period of limitation, whenever they fall within this time of from 14(3) onwards, if the time of limitation fell, it will be automatically extended. Now, the issue that arises or comes up before is that appeals okay, suits okay, applications okay, right? Now, they also said this, whether it's under the general law or special law. Now, general law will be like your civil procedure code, your criminal procedure code, etc. Special law will be like your GST legislation, will be like your service tax, excise. So the order of the Supreme Court was passed under 141 with 142 of the Constitution of India, where Supreme Court can do justice in any matter. And when they pass an order under these articles, it will apply across the country. And all authorities will have to necessarily ensure that the order of the Supreme Court is implemented. So this order of the Supreme Court on 23/3/2020, in my view, is good enough to extend any limitation under any act, irrespective of the fact whether the act, irrespective of the fact whether the authorities under the act have extended the time limit or not. So with this, we should keep always under our knowledge, because there is no such thing as saying that you have a GST law where under 168A they may have done something which is contrary to Supreme Court order. If it is contrary, it doesn't survive. So the period of extension given by Supreme Court in all these cases will actually override any contrary order, and to that extent it will survive. There is a principle, however, we should keep in mind. Orders of the Supreme Court are not legislations. You cannot you cannot use interpretative principles for the purpose of interpreting a Supreme Court order. So please keep this in mind. Why I am saying this is they talk of suits, applications, etc., all other proceedings. Now, the principles of adjustum generis, nociter associates, these kind of things, in my opinion, cannot apply to an order of the Supreme Court. When they say all other proceedings, it means all other proceedings. Now, you have to see, what do you mean by proceedings? For that, let us, before that, see what the Supreme Court did from time to time. The first order was followed by another order on 8/3/2021, where the first wave of COVID came down. Supreme Court thought, yes, COVID has now come down substantially, so we will make a new order where the COVID limitation order will stop and a period of 90 days will be given to file applications, appeals, etc. Or the statutory period, whichever is larger. This was done on 8/3/2021, but unfortunately, this was to start from 14/3/2021. Till that period, the extensions which were done were allowed. After that, you were given a period of around 90 days or the statutory period to file your appeals, etc. But as luck would have it, we had the second wave which started after this order. So once the second wave started in April 2021, it became very clear that there was no way, people could file their appeals, people could file suits, applications, nothing could be done. So on 27/4/2021, the first order of the Supreme Court was extended. That means to say, the first order of the Supreme Court passed in 2020 is still effective. It continues. So as to say, the period of limitation is still continuing. Therefore, actions can be taken both ways. Please understand, if it is beneficial to the assessee, it is also beneficial to the department. We should keep this in mind. Just as the assessee is not enabled to file certain things, the department is also not enabled to file certain things. Now we will look at what was done in the GST regime also. The meanwhile, if you look at what the government was doing, in terms of 168A, they were issuing several notifications under 168A extending the periods. You had several notifications which were issued, 35/2020, which extended to June 2020. Then you had 55/2020, which extended up to 31st August. Then 91/2020 in December, which extended to 31/3. Then 31/5, then 36/2021. That means to say, certain actions are still getting extended. Now, what are those actions that are being extended? if you look carefully at the actions that are being extended in both ways, what it says is filing of appeal, filing of reply application, furnishing of any report document, return statement other than return under 39, furnishing of such other record by whatever name called. And on the department side also, concessions have been given, where the notification under the 168A says completion of any proceeding, passing order, issuing notice. All these actions, the limitation will be extended up to 36/2021. That means it is still running. The short question that will arise is, let us assume some assessees have not filed the returns. They have not filed the returns. Can it be said the Supreme Court order will apply? Because if you look at 168A, they have given this facility for filing appeals, return statements, but they have said it does not include filing of returns under section 39. So the question which arises is, can we take the benefit of the Supreme Court order, or can we strike down this notification itself as being arbitrary and discriminatory? Is the question. Now, first of all, we must understand one thing. If I am unable to file appeals, why is it that an advocate or an assessee is unable to file appeals? What is the reason? The reason is very simple. The reason is that documents are in office. There is lockdown conditions. How will I access those documents to file an appeal? I can't access those documents. If I can't access those documents, I can't give it to my advocate. Or even if I am doing it myself, I can't do it. Lockdown conditions prevent me from going out. Now, if that is the case, as far as appeals and applications and suits are concerned, even those one-off issues that I can't do are concerned, is it not strange that my monthly returns, which have to necessarily be prepared looking at invoices, looking at so much of documents, how will I do that when my staff are all at home? Government may say, no, that's not the thing. You are working from home. Therefore, you should put into place such infrastructure as will enable you to file the returns. I am not sure whether that is the correct approach to this problem. I believe that if you cannot file one-off issues like appeals and suits, applications, there is no way you can file returns and statements. If that be the case, it would be rather strange or idiotic to expect an assessee to file his monthly returns or quarterly returns, as the case may be, collating information. Let us say that you are a multinational company, or you have a company having several branches in India. Where are you going to collate all this information when half the country is in lockdown? It will not be possible. So I believe that this 168 notifications which says that returns, accounts, statements other than under section 39, I believe is manifestly arbitrary. It should be extended to all the returns that are being filed. This extension of time should be given to returns also. See, payment of taxes, you can go do it from anywhere. But next question will be, how will I pay taxes if I don't even know how to calculate? All my accounts, my people who are there are all spread over the country. That is one issue. But filing of returns, I believe, they should have extended the 168A provisions. Now, having not extended the 168A provisions, it would mean that therefore you have to file returns in time. And if you have not filed it in time, what happens? Of course, they have been also giving some leniency in late fee filing and other things, but that is not the issue here. The issue is if I'm not able to file the returns, what happens to my subsequent months? What happens to the credit mechanism? Everything comes to some sort of standstill. Now you look at what the Supreme Court has said in this. Can you say that non-filing of returns is covered in the term all other proceedings? That is the question. Now, if you look at it and see, proceedings means a proceeding under the Act. Traditionally, if you look at income tax and see, income tax assessments are not done by the assessor. I file a return, and then under 142, 143, etc., whatever, 148, all the sections, the assessing officer will do the assessments. But when you come to indirect taxes, the whole thing changes. In indirect taxes, in service tax, in excise, in customs, now it was introduced. Now in GST, if you look at section 59, it says you shall self-assess the tax. Once you self-assess the tax, after that scrutiny of returns can take place under 61. Reassessment can be done under section 73 or 74 as the case may be. This is the scheme in GST. Now, can you say, therefore, that if I have not filed the return, filing of a return in itself is a proceeding under the Act? If you look at the plain terminology used and the context in which it has been used, normally, proceeding means a proceeding undertaken by the tax authorities against the assessees. Therefore, if you look at that normal terminology, you would be tempted to say proceeding means what is done by the authorities and not what is done by the assessee. And therefore, if your non-filing of returns cannot be all other proceedings. That's one way to look at it. The other way to look at it would be, what has the Supreme Court said? Difficulty in filing, please take the 23/3/2020 order, then they say difficulty in filing petitions, applications, suits, appeals, all other proceedings. Now, this proceeding could also mean it's only before the court of law or a quasi-judicial authority. It's court of law or a quasi-judicial authority, like maybe a assistant commissioner of taxes, deputy commissioner of taxes, commissioner of tax. You're not able to file. You're not able to do any proceeding. Attend the proceedings which are initiated by the department. So if you go by this definition, then the Supreme Court order will not help you if you have not filed the returns. But there also, this is the argument which I'm placing before this association, is this simply this. If I'm not able to file my petition or even an application, how will I be expected to file the returns? And therefore, all other proceedings should be read widely to include not just appeals or suits, but it should also include the returns that I am due to file, which I am not being able to file, because without the returns happening, proceedings cannot start. I would think that this interpretation is a 50-50 interpretation. I cannot tell you with wholehearted confidence that it will be accepted by the courts in India. But we should give this a try, because we should try to understand, make the courts also understand that the executive should have issued notifications extending the period for filing returns under 168A. So I would think that this point needs some amount of arguments in the courts. If it were to go to the courts, it will require some amount of argument, and we should be able to convince the courts that proceedings should be wide enough to include filing of returns. A very, very tall order, but we should try it. if you look at what the income tax department has done, the CBDT has issued a circular that is on 25th of May 2021. They issued a circular 10 of 2021 saying, if different relaxations are available for different compliances, of course, they had issued this circular keeping in mind that you could have different periods for relaxation. As the Supreme Court has said, appeals filing itself can be postponed completely. CBDT would have issued another set of notifications which are more restricted, but they set this principle. If the time limits given under these two orders are different, that is the Supreme Court order and the CBDT orders are different, then the assessee or the department can take the benefit of the longer period in either of this. We don't have the GST department, having issued a similar circular. But I'm very sure that when it goes up to courts, very clearly the CBDT circular can be relied on even for indirect GST purposes to show that one administrative body in charge of income tax has taken a view that the limitation period under income tax, you can follow either the CBDT's instructions or the Supreme Court instructions, whichever is more beneficial. I mean, CBDT need not have issued this circular because Supreme Court, whatever order they pass is binding. But if the CBDT instructions gives a longer period, for example, let us say, if it's a theoretical, analysis only, then you can take advantage of that CBDT instructions also. As of now, the Supreme Court has, given a continuous period. Now we need to look in and see what are the decisions that have come up to now on this. The very first important decision which came up in Sagufa Ahmed's case, Supreme Court considered whether when the limitation period expired prior to the COVID order, just before the COVID order, can you still file a belated appeal? This was in respect of company law matter before the NCLT. Supreme Court said the order of the Supreme Court will apply for the period which commences during COVID. Only from 15/3/2020 onwards, it starts from there. If prior to that, your appeal filing period was already over, you can't take advantage of the Supreme Court order. In other words, let us assume that you have to file a GST appeal, and the period for the filing the appeal, including the extended period, fell before 15/3/2020. Let us say it expired on 1/3/2020. You can't take the benefit of the Supreme Court order. This is what the Supreme Court said. They're absolutely right in saying so. But for those people who have done that, I would tell them, please approach your respective high courts. Even though GlaxoSmithKline decision of the Supreme Court says that the time period has to be adhered to, high courts should not ordinarily exercise their jurisdiction. In spite of the GlaxoSmithKline decision of the Supreme Court, the Madras High Court, in Mahindra and Mahindra's case, the division bench, and the Karnataka High Court have said writ jurisdiction is available. Let us assume that 4 months is over, you have not filed the appeal. In a fit case, writ jurisdiction is available. What are those fit cases? Those fit cases will be cases where the original authority has not adhered to principles of natural justice, where the original authority has not even seen your submissions, where the original authority has passed a perverse order. These could be fit cases where the High Court can interfere in writ jurisdiction, but don't take the chance. This window is a limited window. So in Sagufa Ahmed's case, the Supreme Court said if the period fell before the starting of the COVID extension order, then it doesn't apply. So that is against the SSC. Then if you look at the other decisions which have been passed, for example, the AP Andhra Pradesh High Court in Sri Sai Lakshmi Padmavati Dal Mills in 2021 TIOL said that the apex court order will apply to all the appeals, and in fact relegated the petitioner to go back to the appellate authority and file the appeal, and said because of the apex court order extending the period of limitation, if it fell within that period, it will be excluded. Then you looked at Gokul Traders, where the Madras High Court, this was a case where a bank attachment was done. This has become a usual feature now in GST law. Bank attachments are done frequently. Now, the order of assessment was passed on 17/2/2020, but was served on the assessee only on 30/3/2021. You see, after a year. Attachment had been done on 10/3/2021. What the revenue said was, we served the order by email. Physical copy only was sent on 30/3/2021. By virtue of section 169 of the Act, service of order by email is possible, and therefore, the bank attachment is perfect. See, the order of assessment was sent on 17/2/2020, and the order of attachment was passed almost more than a year after that, and therefore, whatever they have done is correct. There, what happened was the petitioner, I think, got a little afraid and said, allow us to file the appeal as the COVID order is running. So the Madras High Court said, yes, go and file the appeal. Now, there is one way of looking at it. If I file the appeal, I do not know if your bank accounts are attached. How will you pay the mandatory pre-deposit? For that, you have to approach the High Court again for a mandatory pre-deposit. Then another case is the SS Group Private Limited's case. The National Commission, this was on the, what they call is the Consumer Protection Act. Last year, the Supreme Court passed an order where they said the written statement to be given before the National Commission will have to be done within a time period. And if the time period, the written written statement is not given, then it is time barred. New India Assurance Company Limited, they said this. So the National Commission said, if it is beyond the time, we are sorry, we can't do anything. But then what the National Commission in Consumer Protection forgot to see was that these time limits fell in July 2020, when the COVID order of the Supreme Court was already continuing. So therefore, the Supreme Court said, no, you have not seen properly. The time limit for filing written statements under the Consumer Protection Act stands extended by the COVID order, notwithstanding the Constitution Bench decision in New India Assurance. That means to say this principle. All your appeals, even though they may be time barred, they may be more than 4 months, 5 months, 6 months, will have to be accepted under the GST because the COVID order of the Supreme Court is running. Please keep this in mind. Another decision of the Andhra Pradesh High Court in Walchand Nagar Industries case. The company was served a notice to appear before the commercial tax officer. They wanted not to appear because of COVID. But the CTO refused the adjournments. You see, unlike income tax where faceless assessments have started in 144B, in GST, we don't have this concept of faceless assessment as it is now. It will start sometime shortly. So CTO passed the orders and he said this. I will take up the matter because the Supreme Court order, yes, it is there. There is a Supreme Court order. But I will take up the matters for assessments. Nothing can stop me. So they went to the Andhra Pradesh High Court and said that once the Supreme Court order has been passed, where the time limits of all proceedings have been extended, insisting that the assessee should come in person and attend to proceedings, taking the risk of the COVID is not correct. And therefore, the Andhra Pradesh High Court set aside the order of the CTO and granted the reliefs of Walchand Nagar Industries. This is again a good decision of the Andhra Pradesh High Court. So in summary, my friends, I would like to tell you that 168A, if you fall there, well and good, time gets extended. If the time extensions under 168A expire on 36/2021 without any further extension, please understand the Supreme Court order will come to your rescue. That till such time it is modified, that limitation for filing appeals or suits or applications will continue. Now, as far as returns filings are concerned, as 168A notifications have been issued for everything other than returns under 39, you can challenge that under this high court before your jurisdictional high courts on the ground that the exclusion of returns is manifestly arbitrary. And you should also try to take a ground that you should interpret the term all other proceedings wide enough to consider even self-assessment proceedings that you do on yourself under section 59. As I've told you, it's a difficult stance to take, but you must take this stance also to see if you can get the benefit of a favorable court ruling. This is as far as extension of time limits, etc. are concerned. Now we will move on to the certain topics which are of interest to all of us. The input tax credit, works contract taxation. How do we deal with these controversial topics which are there, 86A, 86B, etc., etc., etc. Now this GST was formulated with this in mind. I am introducing a nationwide tax. Cascading effect of taxes should completely go away. What position I had earlier should become better. Now, after 4 years of working with GST, you all people know very well that input tax credit is still not seamless. If I pay SGST in one state, I cannot take credit in another state, leave alone SGST. If I pay CGST in one state, I cannot take credit in another state. While in the earlier service tax or excise regime, if I paid service tax in one state, I could take credit in another state. So therefore, GST regime has actually put the clock back as far as the central credit mechanism is concerned. And I think, and I believe that we must in each state file petitions and force the central government to abide by this cascading effect principles for all the CGSTs, because what I pay in another state, as far as CGST is concerned, it is a revenue collection by the central government. What is the problem in giving a credit to the CGST paid in Kerala to me in Karnataka? I don't see any problem. Why should a person who travels all the way to, let us say, Karnataka, stays in a hotel here, gets a CGST, SGST bill, goes back to Kerala to claim the credit, he will find he can't claim the credit. Credit cannot be claimed. So you have position in GST as compared to service tax and excise has actually become worse. So we need to find a mechanism where the government should be told that the CGST credits across the country should be restored like the service tax regime. That is point number one, because cascading effect is there. As far as the business is concerned, let me tell you this. Whether I pay tax in Kerala, whether I pay tax in Karnataka, whether I pay tax in any part of India, why should I not get it? input tax credit is, I'm not able to understand. How can the states say, we will not give credit for X, we will not credit for Y? This is a completely self-defeating mechanism. And we are caught in this big issue because of one line of thinking that is permeating the executive and the judicial. What is that line of thinking? That input tax credit is a concession given by the legislature. It started in Jam Industries, Jam and Company's case by the Supreme Court, where they said input tax credit is a concession. Supreme Court followed this in TVS Motors case, ALD Automotive's case. Every other high court is now saying input tax credit is a concession. This has caused a lot of problems across the country. Please understand, you just contrast it with the European Court of Justice decisions. European Court of Justice decisions very clearly say, without input tax credit, you can't have a value-added tax system at all. And that is the truth. That is the truth. You don't have ITC, you don't have VAT. GST cannot work without ITC. So it is no more a concession. It is actually a necessity. It's a legislative necessity, not a concession. So I'm hoping that our judiciary will turn its eye to this aspect and announce that the decisions given in the earlier regime are not applicable to the GST regime. Now we will go one by one into the input tax credit scheme because we need to discuss several things here. I will basically discuss 16 and 17 because that is of a lot of importance to us. And therefore, I will go section wise so that it will be like a class for all of you to the extent possible. Now you take 16.1. 16.1 says this very clearly. If your goods or services are used in the course of furtherance of business, you are entitled to the credit. Therefore, the test for credit is 16.1. Though certain other sections override it, this fundamental concept of input tax credit is in 16.1. And there I would like to draw your attention to a fundamental thing. Input tax, you please see this. Every registered person shall be entitled to take credit of input tax charged on the supply of any goods or services or both, which are used or intended to be used in the course of furtherance of his business. And the said amount shall be credited to the electronic credit ledger of such person. There are two actions that happen in 16.1. First, you are entitled to credit, and that credit can be taken in your electronic credit ledger. Now, straight away you come to 16.4. A registered person shall not be entitled to take input tax credit beyond the time period which is specified. That is the September returns or the annual return, whichever is earlier. So please understand, the taking of credit should be in your books. If you have taken credit in your books, credit in the electronic credit ledger can be later. 16.4 should be read in a way that they say, you cannot take credit in your books. You cannot take credit in your books after the date given. It is not credit in your returns after the date given. That is the interpretation that I would like to place before the Association of GST Professionals. First issue, 16.4 time limits will apply to the credits taken in the books, not in the returns. So return, if I take the credit in 2018, the books, I've forgotten to show in the return. In my humble view, at any point of time, I can show it in my return. subject to the procedural problems that may arise. 16.1 is a substantive provision. 16.4 is a provision relating to limitation. Please understand, law of limitation is always procedural in nature. So to that extent, 16.1 actually will override 16.4. 16.2, when we come to, we have some interesting propositions in 16.2. 16.2 starts off like this: notwithstanding anything contained in this section, that means to say 16.2 will prevail over all other subsections. There are 4 subsections. So 16.2, the conditions prescribed in 16.2 are mandatory. That's what it tries to say. It is mandatory, 16.2. These are the conditions. It has to be followed. No lenience. Now, what are the conditions? You should be in possession of the tax invoice or the debit note. Perfect. No problem. In Finance Act 2021, they introduced this clause AA, where they say that the supplier should upload in his 2A, he should upload the details of the debit note or invoice. And if he does not upload, you cannot take credit. Now, is this condition capable of being complied with by the recipient? Is the question that we have to face in this session. Let us assume that I supply certain goods to Mr. Raman Kuti or supply certain services. Mr. Raman Kuti has paid me the entire amount, including taxes. He has paid me. What I do? I do not pay the tax, or I pay partial tax. I don't upload his invoice in my 2A. So what this section says, of course, this section is yet to be brought into force, but let us discuss it, assuming it is in force. What this section tries to say is what is contained in all your 36, Rule 36.4. They are doing it to the back door. They first introduced 36.4, then they introduce 16.2. The question that arises is, can Mr. Raman Kuti force me to file the returns, upload this 2A, pay the taxes? Because payment of tax is also compulsory in 16.2C. That is the third subsection. It says I should have paid the taxes, then only you can take credit. Now, this question is a vexed question, because what happens if I don't pay or I don't file the return? How can Mr. Raman Kuti, who has given all the money, everything to me, be proceeded against when I have decided not to do this? So these issues in the VAT regime went up to the Delhi High Court. There's a batch of course, Madras High Court is also there, but Delhi High Court, it went up there so as to find out whether such a provision is correct in law or it is not correct in law. There, 10 GSTL, you will find one decision, Onquest Manufacturing Company, the Delhi, Arise India, etc., etc. The Delhi High Court said, a condition which makes the credit available only on payment of taxes by the other person, unless the parties are in, unless the parties are hand in glove with each other, such a condition is to be read down. It is unconstitutional. It falls foul of Article 14. Why? Because it's a condition impossible for the person, Mr. Raman Kuti in this case, to satisfy. He has paid, he has done everything in his right, and therefore he cannot be expected to do more than what he has done. So the same decision in Onquest will apply, the Delhi High Court will apply with all force to GST. If you look at the sales tax regime, Ranganathar valves, the Madras High Court said the same thing. You cannot delay it because that man has not paid. The decision of the Madras High Court in Dai Beathal Enterprises, you should read carefully. In that case, what happened was the department came straight away to Mr. Raman Kuti to recover the taxes. Without coming to me, they went directly to Mr. Raman Kuti and said, see, that man has not paid the taxes, so you pay. So Mr. Raman Kuti said, no, I am sorry, I have already paid the money to him. Department said, no, tax has not come to me, I will recover from you. So there, by mistake, I think the judge has written, taxes could be recovered from either parties, but first you should proceed against the service provider. That is a wrong statement of law, but that was only an arbiter. You can recover tax only from the person who is liable to pay. You please see the Bengal Shachi Corporation's decision of the Supreme Court, where they very clearly say this. You can recover tax only from the person who is liable to pay. If I have not paid my taxes, you cannot go to Mr. Raman Kuti, to whom I have supplied the services, and recover it from him. It is not possible. So the statement of law is very clear in my humble view. 16.2AA and 16.2C will not stand the test of Article 14 and 19 of the Constitution. In a fit case, it will be struck down or read down. Where Mr. Raman Kuti can clearly prove that he has done everything. He is not hand in glove with me. In such cases, he will be able to take the entire credit. But he has to fight his own case, starting from Kerala High Court, and the matter will go up to Supreme Court. So we have to be clear on this. Then let us look and see one important thing which I thought I will tell you before we go to the other things. What do you mean by, if you look at one very distinguishing feature of input tax credit, 16.1 does not talk of input services, inputs, or capital goods. It doesn't talk at all. It simply says goods or services used. Division in capital goods, division in input services or inputs comes only much later. It doesn't come in 16.1 at all. So the conceptually, when they designed the ITC mechanism, it was supposed to be common. There was no difference between capital goods inputs and input services. This was a concept bought into the rules predominantly. 42 and 43, different rules for different purposes. It was bought in. So therefore, if you can prove that these goods or services are used in the course of furtherance of business, when you say in the course or in the furtherance of business, please take these two clauses independently. In the course means starting to end, whatever happens in that business, you can take credit. In furtherance is a wider term. Before the business starts, I do certain things to promote my business. That is also in the furtherance. So I'll draw a parallel with the Income Tax Act. If you look at the decisions of the Supreme Court in Income Tax Act, especially in respect of section 36 and 37, there is a test called commercial expediency test. What is commercially expedient? That expenditure will be given deduction from income from business. This is the decision starting right from Eastern Investment Company's case in 20 ITR. It continues. So a whole host of decisions come. Malayalam plantations in 53 ITR. So many decisions come. Commercial expediency test is to be found, is to be applied to see whether, what is the terminology in the furtherance of business. Same test will apply in my humble opinion. So if you take credit and it in any way is beneficial for your business, credit will have to be given, though the Supreme Court says this in Eastern Investments case. The benefit of that expenditure, a portion of it may go even to a third party. See, supposing I do an advertising for, say, let us say Coca-Cola does advertising for Coca-Cola, Coke. The benefit of that advertisement may go to a dealer because he's also a dealer in Coca-Cola. The Supreme Court still allows the expenditure in the hands of Coke on the grounds of commercial expediency. The same test will apply even here for giving you the input tax credit completely. You will get the credit of input tax on this ground that it is commercially expedient. Same way, in the furtherance of business is a commercial expedience test. For example, you take the Madras High Court decision in MRF's case. MRF Foundation has been set up to promote pace bowlers. People all know in cricket pace bowlers. MRF Foundation has been set up. Foreign, pace bowlers come here. Dennis Lilly, so and so, X, Y, Z. All of them come here and train the Indian pace bowlers. The issue in MRF's case was whether the expenditure at the Pace Foundation can be claimed by MRF Limited. Tribunal said no. High Court said yes, because High Court said which is essential for the business is for the business to decide, not the income tax authority. They want to promote the brand of MRF so that they get better sales. One method of doing it is to encourage sports. It goes to indirectly promote the business of the company. And you cannot say what is essential or not essential. The same thing applies. Who is to decide whether something is in the course of furtherance of business? The businessman, the chartered accountant. In fact, the legislation says capital goods as capitalized in the books. The businessman and the chartered accountant will decide what is capital goods and what is inputs. The department cannot question it, in my humble view. The matter is ended. If something is capitalized in the books of accounts, it becomes capital goods. If it is not, it becomes inputs. In my humble view, a question cannot be raised by the department that this should have been treated as capital goods. No, that is left to the decision of the chartered accountant and the business together. That is how the GST law has been framed. Now, when we come to these block credits, one of the things that in 17 that comes, the apportionment of credit comes. We have several issues in this. Now, one of the issues that has been troubling me for long and I have been giving opinions is 17.2 and 17.3. 17.2 is a provision which says if you are using inputs in taxable supplies, in exempt supply, to the extent that you use it in taxable supply, you can take the credit. To the extent you're used in exempt supply, you don't get the credit. Simple. Now, the issue that comes up here is, what is this exempt supply? Exempt supply means it should be completely exempt from tax, wholly exempt from tax, or it attracts nil rate of tax as per section 2(47) of the CGST Act. If there is a rate specified, if it is a concessional rate, it will not be exempt supply. It will continue to be taxed at a lower rate. And credit will be completely available in such cases. So this we should keep in mind. Having formed the 17.2, 17.3 says for the purpose of finding value under 17.2, value of exempt supply will include sale of land, transaction in securities, etc., etc. Now, this 17.3 has too broad an excess. Sale of land cannot be bought to tax at all. There's the question of utilizing credit for the purpose of sale of land. Transaction securities cannot be bought to tax. So the 17.3 seems to be very wide. This doesn't have nexus with 17.2, and therefore we may have some issues with this interpretation of 17.2 versus 17.3 is going to be challenged in several high courts. Some may hold in favor of the assessee, some may hold in favor of the department. We have to wait and see. This is going to cause some problems as I see. But in this session, we are more concerned about one issue. How do we take credit on works contract services? What is the difference between works contract, plant and machinery? Works contract services, plant and machinery. If you look and see 17.5C and 17.5D, what are the issues that come up in these two? Works contract services was when supplied for construction of an immovable property other than plant and machinery is barred from credit. That means what are they saying? If I make an immovable property and I have hired a contractor, his bill, whatever he charges me GST, I cannot take credit because the resultant property is immovable property other than plant and machinery. That means if that man is erecting a plant and machinery, I can take the credit. But if he is erecting any other immovable property, I cannot take credit. So the issue becomes, what is plant and machinery? What is immovable property? If it is immovable property, no credit. If it is plant and machinery, credit is available. So says the legislation. So they have defined in the explanation to section 17.5, section 17 itself. Plant and machinery means apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services, or both, and includes such foundation and structural supports, but excludes land, building, or any other civil structures. So therefore, what they're trying to say is plant and machinery includes apparatus, equipment, etc., okay, but does not include land, buildings, or any other civil structures. Let us draw parallels from the income tax law again. We had this section 43A, which defined what is a plant. Books, for example, is included in plants. For a chartered accountant, for an advocate, books is plant because he uses it for the purpose of furthering his profession. Without books, we are nowhere. Question that was always there in the income tax regime, and it was hotly contested, was this. Supposing I build a theater, supposing I build a cold storage building, is it plant or is it building? If it are building, the depreciation rates are lower. If it is plant, the depreciation rates are higher. Buildings constructed for a particular purpose, can I classify it as plant and machinery is the question. (243) ITR, 244 ITR, two decisions of the Supreme Court at loggerheads with each other. Venkata case and Anand Theatre's case. Slight differences, but they seem to lay down different propositions. Supreme Court in Anand Theatre said a theatre is a building, not plant. Somewhat different view was taken in Venkata case in respect of other building. Then this matters where, of course, you have scientific engineering's case, you have Taj Mahal Hotel's case of the Supreme Court, which said the term plant means something that is used in your business. So what in Karnataka Power Corporation's case, the Supreme Court held, what they said was functional test. If you use it as a tool in your business, it becomes plant. If it is used only to house your assets, etc., it is a building. This is the difference between plant and machinery and building. A building houses people, houses machinery, houses several things. But when the building itself is used for business, is built in a way specialized for that business, it becomes a tool. So in Victory Aqua Minerals case 339 ITR, the Supreme Court said the ponds which were constructed specially for the shrimps, cultivation of shrimps, the ponds which were constructed specially is a plant, it is not a building. These cases are all prior to 2004. 2004, the legislature brought about an amendment saying plant does not include buildings. Same thing has come in GST. Plant and machinery does not include land, buildings, or any other civil structure. Still, in my opinion, if you can prove that it is an apparatus, a cold storage building, for example, you look at it. You look at a bank, come nearer, you look at a bank. The building, the safety vault which is built is specially built. Without the safety vault, that structure with that special structure, it is not possible for you to have a bank. The building has to be modified substantially to have a safety vault in that portion, and then only you can have a bank. Similarly, a cold storage equipment facility, the entire building for making it air conditioned, the kind of modifications that have to be made to a building is substantial. That kind of modifications, when they are made to a building, it becomes a tool of the business. It is not just a building to house something. It becomes a tool for the business. A cold storage equipment, you will not put it in cold storage unless the building is so modified. And that is the test which you have to apply here also, in my opinion. I'm not saying this is a foolproof opinion. When you exclude buildings, in my view, that building should be a general purpose building, not a special purpose building which becomes a plant. When your building becomes an apparatus, credit can be taken. When your building becomes a equipment, functional test has to be applied. It becomes an apparatus, a tool for the business. It has to be constructed in a particular way only. So in my view, if you have works contract services for a cold storage building, you can take the credit, because the cold storage building is not a normal building, not a normal civil structure. It is a specialized building where the building itself becomes a tool. A warehouse built, storage and warehousing services, if supposing I'm giving storage and warehousing services, and the buildings accordingly constructed. For example, if I have to give storage and warehousing services, let us say for Amazon or Flipkart, I have to have a cold storage room. All those cold, the butter which comes, the ice cream which comes, the cold milk which comes, this has to be put into the cold storage. And my warehousing services, I cannot give to Flipkart or Amazon if I don't have this cold storage. That is why, if you see the first decision, of course, they changed the law to overcome the decision. But the first decision, Sai Samhita Storage, Andhra Pradesh High Court said cement and steel, which is used to make a warehouse, and from which you provide warehousing services is entitled to credit. Now 17.5C, 17.5D, in my humble opinion, 17.5D also, if you yourself construct a specialized building using cement and steel, you can take credit, because that building is no more your housing facility. It becomes a tool for your business. Therefore, in my humble view, this clause will lead to litigation, no doubt about it. But let us look and see what is the ratio given in Safari Steel. This is the Safari Retreats case. That is not about plant and machinery, but the ratio you see. What is the Safari Retreats case? I put up a commercial building. Now, this commercial building may consist of, let us say, 20 offices. I put it up in Cochin. 20 offices which I sell to leading professionals like Mr. Raman Kuti and Mr. Others, Mr. Sabu, Mr. Suresh, Mr. Satishan. All these people like sell the building. If I sell the building before completion and pay GST, I'm entitled for credit. But because of 17.5C and D, what it says is, if you keep the building to yourself and only rent it out to Mr. Satishan, let us say, rent it out to Mr. Raman Kuti, no credit is available because you're capitalized in your books of accounts. So what did the Orissa High Court say? The person who sells the property before completion pays GST. The person who keeps the property, rents it out, on the rental is paying GST. Why are you discriminating between these two people? You cannot discriminate between these two people. You should give credit to them also. The Orissa High Court is right. Because for removing cascading effect, not only for the person who builds and sells, it is also for the person who rents and pays GST on the rental. The matter is pending before Supreme Court. It has not been stayed. Parallel proceedings around the country. In Karnataka High Court, we got a favorable order for stay in Bagmane developers case. But the principle is this. The moment you are paying GST, either as the building as a whole or through rental, credit should be allowed. That is a principle in Orissa, in Safari Retreats case. Add this another principle. If you can prove that the building is a plant for you, then it becomes additionally entitled for credit as a plant and machinery credit. So when you take credit under the input tax credit scheme under 17, you have to look at this aspect very carefully, whether it is building simpliciter or plant and machinery. Both may be capitalized. But when you capitalize something as plant and machinery, the credit is fully available. When you capitalize something as building, credit gets blocked by the section. You have to take the credit and fight the case. So this is one distinction which you should keep in mind, that you may go into litigation because of this. But there are several decisions in the income tax regime which will help us in the GST regime to show that if a building is a plant, probably you can take the entire credit. And we are going to have a lot of case laws filed. You take, for example, a lift. You look at the tariff issued under 11/2017. There are entries for erection of lift, installation of lift. Though lift becomes part and parcel of an immovable property, it is used, it is essentially a plant. It is essentially a machinery. The tariff itself talks of installation of lifts. That means the legislature has recognized that lift is a specialized machinery. So in my humble view, installation of lift, purchase and installation of lift is a plant and machinery. It is not a, even it may become part of the building, but it is not building. So please keep this in mind. It may become part of the building. It may become immovable property, but please understand, immovable property is not excluded from 17.5C or 17.5D because they say that you look, read it carefully. Works contract services when supplied for construction of an immovable property other than plant and machinery. That means, and you see the definition of plant and machinery: fixed earth by foundation, structural support. With any lift comes with structural support, cables, hanging cables. So therefore, in my view, this lift business, which the department is in several AIRs is trying to say that it is not credit, not entitled to credit, may require to be re-looked, because your own tariff is talking of installation of lifts eligible, therefore it will be eligible for credit. Then let us look at this works contract taxation, because that is a very interesting offshoot from this. This is a seed which came to me. I was thinking about this when I was addressing certain other seminars, and Mr. Raman said you should address it in our association of GST professionals also. And I asked this question to each one of you who are present here. What is the difference between works contract services and construction services, which is there in Schedule 2? What is the difference? I'll ask you a simple question. I'm constructing a building for a private person. I buy the materials, I have my own labor. I'm a contractor. I do it for Mr. Raman Kuti. Mr. Raman Kuti wants to put up a building, let us say, commercial complex. He approaches me, and on a turnkey basis, he gives to me, and I am doing it. I buy the materials, cement, steel, etc., put up the building. How will you tax this transaction? It's not a house where I can take an exemption from the under 12/2017 or so. It's not that. Can you bring this to tax under the present regime? Is the question that I'm going to answer in this. I request. I can hear somebody's voice. I request them to kindly put yourself on mute if that could be helpful for the rest of the people and to me also. Thank you. The question that arises, and I'm raising this question especially to people like Mr. Raman Kuti, Mr. Soman. I hope Mr. Soman is there. I'm not able to see him. If he is there, please apply your mind to this question. Yes, Mr. Soman, I have seen you. Yes, good. Please apply your mind to this question. Is there a taxation of works contract possible in GST for non-governmental work? Governmental work, they have listed out in the notification 3/2019. What is the difference between construction services and works contract? Definition of works contract says specifically it is a composite supply, in the sense you read 2(119) and read it along with schedule 2. Goods and services are involved. That is why it becomes a works contract. You read the definition of works contract in 2(119), it becomes very clear. What does it say? Works contract means a contract for building, construction, fabrication, etc., 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 of immovable property, of any immovable property, wherein transfer of property in goods, whether as goods or some other form, is involved in execution of such contract. So goods and services forms an indivisible contract. That is a works contract. Now, when you have this entry, you have another entry, construction services. And you look at the tariff 11/2017, it talks of only construction services. The entry in schedule 2 is borrowed from the service tax declared services entry. The same entry comes. Please go back to the decision of the Supreme Court in L&T's case. This is a different decision. L&T's case in 39 STR, Justice Rohinton Nariman's decision, not the other L&T decision of Justice Lodha. Go to Justice Rohinton Nariman's decision. See, commercial construction was introduced in service tax in 2004. Works contract tax was introduced in 2007. So issue before the Supreme Court was, prior to 1/6/2007, can a works contract be taxed? And Supreme Court said, prior to 1/6/2007, it cannot be taxed. And they also said this: construction services that is envisaged in service tax, that entry, is services simpliciter. That means if goods is involved, no tax. So all works contract will come only under from 1/6/2007, because works contract is a species of contract. Please remember, this is what the Supreme Court said. It's a species of contract, different. Till 2019, April 2019, you had an entry for works contract in notification. The rate notification, you had an entry for a works contract. In 1/4/2019, they removed the entry for works contract and brought in works contract entries only for governmental constructions. The intention of the government was all other private contracts will come under construction services, under the notification. What they forgot, however, was this. Under the notification, they of course said value of goods, value of land, etc., etc. What they forgot, however, was construction services entry, which is there in schedule 2. Read with 7(1) capital A. Covers only services simpliciter as per the L&T decision, because it is borrowed from a service tax regime. No difference in the entry. Declared services. Where goods are involved, it becomes a works contract, and there is no scheme of taxation of works contract for private citizens in this country today. This is a major lacuna in the GST regime. Probably the first time somebody is pointing out to you. Please apply your mind to this, because there is no works contract entry for private people today. You have only construction services entry, 3(12). Even I used to think 3(12) will cover works contract services up to some time back. When I reread these entries, it occurred to me, construction services covers only services simpliciter as per L&T decision. When goods get involved in a contract, that is to say, let us assume that I am building the commercial complex for Mr. Ramankuti as my example. In my example, if Mr. Ramankuti gives me all the materials, I only do the labor. It will come in construction services because it is services simpliciter. But the moment I buy the materials myself, I use the labor myself. Labor and materials mixed, it becomes a works contract. And if it becomes a works contract for governmental sector is rates are specified, but works contract for private purposes, no rate is specified. Intention of government is 5 and 1%. We want to tax the everybody under construction services at 5%, 1%, close the issue. No input tax credit, close the issue. That is intention of the government, no doubt. They've carried that intention, saying that because this is construction services, everything is covered here 5 and 1% for private people. No works contract entry for them. But all the other definitions in the Act has not been changed. The decision in L&T's case, which applies 39 STR, applies in all fours here. The difference between a works contract and a construction services simpliciter is this: in a works contract, goods are also used. It will not fall under the residual entry in the rate notification under 3(12). This is what I was telling. Sometime back, I used to feel the same way. But the residual entry says construction services not elsewhere specified. It has to be construction services. And construction services simpliciter is only labor. That is why entry 2, which pertain to works contract, you deleted specifically. So this is a very important point, which I thought I should bring it to the notice of the Association of GST Professionals. Because I'm myself have taken a view earlier that works contract is possibly under 3(12). You pay 18% only on the goods and materials. You leave the land completely aside. You can do that for any builder even today. Let me tell you, you can take a stance that works contract is in 3(12). Land value completely you exclude from the agreement. Tax the goods and services component at 18% and take input tax credit. Nobody can stop you, my dear. The rate notification 3/2019 says it is compulsory for you to take the notification, but puts out 100 conditions. Such a notification is invalid in law. Because if I don't satisfy the conditions, what happens to me? What rate do I pay? On what do I pay? And that notification, as I've already earlier told the Kerala chartered accountants and other chartered accountants, that notification says land value is restricted to 1/3, and that kind of restriction is not possible. You can take the view, pay 18% only on goods and services component, exclude land completely, and take credit. Nobody can stop you from doing it. But I'm giving you an additional ammunition. If goods and services is involved in a contract, it becomes a works contract. And there is no taxation of works contract for private citizens today in the scheme of things. The rate notifications don't say so. 3/2019 doesn't talk. It's a very controversial issue that I'm raising in this forum, but this forum is meant for intellectuals. This forum is meant for intellectuals. It is not a forum where I will come and tell you everything is taxable. Every damn thing is taxable. No discussion. Whatever the department says is right. Whatever the assessee says is wrong. Whatever advocate says are false. This is not that forum. This forum is for an intellectual discussion. That is why I'm telling, please apply your mind to this works contract taxation. There is something greatly amiss in this. People have not seen through this, even I have not seen through this till some time back. When it struck me that this works contracted is different from construction services. So this is another point which I felt I should raise in this forum so that we can think about it and see whether further discussion should be done on this. Then we'll come to 17 bracket. See, this is one hot topic, this 36.4 and 86A. These topics, let me tell you this. Artificially restricting credit through rules is not possible. You cannot put in condition under 36.4 that he should upload, then only credit is available. Similarly, you cannot say I will block the credit without giving you an opportunity of hearing. If you look at 86A, I have filed, the first writ petition was filed by me in Karnataka High Court. I got a stay. It is still pending. It is admitted and still pending because I wanted a decision on merit which reads in the principles of natural justice in 86A. 86A does not have a scope for natural justice at all. Simply I block the credit. One day, that too, in your computer, it will not be visible. It will be visible only in the department's computer, it seems. Block credit, it comes. So in my view, this 86A and 36.4 has to go out from the statute book because it is too draconian. It puts artificial restriction on credit, which is not permissible under the input tax credit law that is prescribed. In block credits, we have another issue which normally comes up, which though not mentioned here, I would like to, take this up. 17.5H, this is of some concern to all of us across the country. What it says, input tax credit on goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. This is on the input tax side, not on the output. If your inputs are lost, if your inputs are stolen, if your inputs are destroyed, your inputs are written off or disposed by way of sale or gift. Just give me 2 minutes, I'll have some water. Thank you. If you look at it, you must be very careful in interpreting this section. If your inputs are stolen, destroyed, written off, lost, what is the common thing in this? Lost, stolen, destroyed, written off. You're not able to use it. Listen, you're not able to use. That is why you don't get the credit. So this 17.5H, the test that should be laid down is usability. If you are used to the goods, the question of attracting 17.5H does not arise at all. Goods lost means it is gone. I've lost it. I've not been able to use it in my factory. Inputs stolen, that means I have not been able to use, somebody has stolen and gone. Destroyed. Destroyed is different from wastage. Please understand this. When I issue inputs for production and some part of the inputs is wasted, that is not destroyed. That is used in production. Destroyed means I have not used it at all. Some fire. I put it in go down fire. It got destroyed even before I issued it to production. Written off. There are several tribunal decisions which says written off means you could not use them. You're disposed of without even using them. That is written off. Disposed of by way of gift or free samples. Please understand this. There is a difference between gift and giving something as a sales promotion expenditure. There is a substantial difference. What I give as a gift by transfer of property act, gift means something which I give, transfer. I transfer the ownership without consideration, voluntarily without consideration. But in let us say, because of COVID, sales of cars are very less. So to lure the buyers, I'm giving each one a gold coin. You buy X car from my showroom, you will get gold coin. 4 grams if you buy cars of 3 lakhs or 4 lakhs as the case may be, and 8 grams for costly cars or something like that. You will buy gold coins from any of these vendors, take input tax credit, and the question will be whether you have gifted it as free sample. The answer is no. First of all, it is not a gift. It is a sales promotion expenditure. Second, it is not a free sample because you don't make those goods. You don't make gold. If a car is given as free sample, the inputs used therein, the inputs which you get, that is free sample. Not the gold coin which you buy and distribute. You are not giving it freely. The expectation, the gold coin is a lure to bring the person. So 17.5H, user test should be used in this as per my humble understanding. You should use the user test, number 1. Number 2, sales promotion expenditure is not distribution of free samples freely. This is the other thing which I thought I should tell you as far as 17(5) is concerned. Now we have come to a situation where I would request Mr. Raman Kuti to ask me if there's anything else that I should deal with. Before I go to the question answers, is there something else I should deal with?
2 issues I would like you to very briefly touch. One is that time limit when we were explaining that Supreme Court decision just touch 54(1) and 77. Department of,
no, I didn't get you.
The time limit under 54(1) and 77 you have to distinguish and apply the Supreme Court decision, because even now the disputes are raised by the department for that. Even for 77 there's a time limit application, but 77 expressly does not limit anything like 54.
Yeah, I will answer that right away, because 77, please understand, in my opinion, the decision of the Kerala High Court may not be completely correct, though it is practical. It's a good solution to the assessee. If I pay something as IGST, when I should have paid CGST as GST, let us assume I come under section 19 of the IGST Act. Section 19 of the IGST Act says you will get a refund. If you have paid IGST, but you should have paid CGST as GST, you will get a refund of the IGST under section 19. Come to section 77 of the CGST Act. What does it say? If you have paid IGST, but you should have paid CGST as GST, interest is not payable. The same thing applies in 77 and section 19, when if you have paid CGST as GST, but you should have paid IGST. IGST Act says no interest is payable. Here they say a refund has to be granted. Net effect of all this is this, sir. No time limit is specified. 1. 2. Refund has to be granted without dehorse 54, because 54 and 77 do not go with each other. Let us be very clear that 54(8) itself says that. Section 54 bracket 8 itself says refund of tax in pursuance of section 77 is not covered in 54. So time limits cannot be applied in 77 at all. And let me tell you this. Department has to raise a demand under 73 for the purpose of demanding duty tax from you under CGST plus SGST. After giving you a refund of IGST, please understand this. This is actually what the Kerala High Court should have said, but because both the parties said you please adjust, they did not go further. This is as far as 54 and 77 are concerned. Sir, your next question.
Next question is, sir, you have argued in Supreme Court that Calcutta Club, based on that Calcutta Club decision, the Finance Act recently, they have retrospectively amended the section, and now it should be applicable from 1/4/2021 onwards, but it is not yet notified.
Correct.
If it is not yet notified, then if it is not going to be notified, whether it can, assuming they are taking the period from 1/4, legally whether it will stand.
You are saying it will be applied from 1/7.
Notification is going to be retrospective, then whether legally that will stand or not. Because it is not yet notified. Now I'll have to shell the money out of my pocket. So
yes.
You have to just brief the decision.
Yeah.
For the benefit of part, brief the decision, then applicability of the section.
Yes. So in Calcutta Club's case, of course, I did not argue it alone. Yeah. There are many seniors who are also there who argued before me. So I can't take the credit myself. There are a lot of, at least 7-8 of us who argue. I think about 6 of us who argued it on substantive merits, and others adopted our arguments. Fact of the case is this. In Young Men India Association case, in sales tax, the Supreme Court had held that transactions between an association and its members is between a principal and agent. And therefore, if an agent procures, let us say, food for the principal or liquor for the principal, it cannot be taxed. Principle of mutuality is one aspect. Another aspect is that agent is doing what the principal authorizes him to do. That's all. So therefore, these transactions cannot be brought to tax. When the constitutional amendment came about, the 46th amendment, they inserted clause E in 366(29)(a) to say that associations and the members who constitute it, supply of transactions between them will be considered as a sale of goods if it is supported by consideration. So the Supreme Court referred this Calcutta Club's case to a larger bench, saying that is Young Men India Association still valid after the constitutional amendment? That was the case which went to Calcutta Clubs. Then what happened? Sports club case in Gujarat High Court and so many other cases in the other high courts on service tax. They used the same Young Men India Association case and said mutuality principle number 1. Number 2, principal and agent, they cannot be brought to tax under service tax. Department, when they wanted to get these matters admitted in the Supreme Court, they tagged this along with Calcutta Club's case, all the service tax cases, saying principle is the same. So it was all tagged along. You see the fun. We go to Supreme Court I remember on Tuesday we go. This matter is listed before the larger bench. our departmental appeals, the person in charge in service tax gets up and says, please dealing the service tax cases from the sales tax. Immediately, the presiding judge, Justice Nariman, said, why? Why did you first join them? They were not able to answer. He said, no, we will proceed with the arguments. You give the arguments, then we'll see whether we should delink or not. So this argument went on for 3 full days. What we tried to tell, and the Calcutta Club's decision is this: one principle of mutuality will apply. When you see a consideration, there should be 2 people. If 2 people are not present, even if you have definitions for that purpose, it will not solve the problem, because you have used the term consideration. Consideration means 2 persons should be there. So he said members clubs are covered by the mutuality principle because the statute uses consideration. 1. 2. What is implied in the Calcutta Club's case is that when an agent does something for the principal, when he procures something for the principal, there is no supply between principal and agent and principal. He does it on behalf of the principal, that's all. So members association which procures security services, for example, does so on behalf of the principals, that is the members. These transactions cannot be brought to tax. This was the ratio in Calcutta Club's case. Now you come to the amendment which is got. You read the amendment. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration. Then they have an explanation. For the purposes of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment, decree or order of any court, tribunal or authority, the person and its members or constitution shall be deemed to be 2 separate persons. And the supply of activities or transaction inter se, this is very important, inter se, shall be deemed to take place from one such person to another. Now, in my humble view, you may get over the mutuality principle by saying these 2 are different. Perfectly all right. But you have not got over this principle that there should be a supply between principal and agent. Principal should supply to agent, agent should supply to principal. Then only you can bring it to tax here under 71AA. If the agent is actually acting on behalf of the principal to procure something, there is no tax under 71AA. So Calcutta Club survives even after the amendment to 71AA, as far as members clubs are concerned.
Now you can go to questions, sir. Now you can put
Yes.
questions.
Yes. First question, whether extension of time limit for compliance in all proceedings will be covered. SVLDRs 2019 was to be done before 36/2020. In my opinion, this SVLDRs, I think, was extended up to 31/8/2020. And in my view, it is all falling within the COVID order. And therefore, in my view, is covered in the expression application under a special law, and the Supreme Court order covers this in my view. Irrespective of whether the extension has been granted under the special law by the executive, it is covered under the Supreme Court decision. Whether time limit for issue also get extended beyond 5 years in service tax excise matters? Yes, sir, it gets extended if because of the Supreme Court order, which says proceedings, appeals. But you will have to argue, of course, this is a difficult argument. You will have to say, well, the assessee is not bound The department is bound by its own actions. If they have not extended the time under a particular statute, that means they don't want to take action beyond 5 years. Please use that argument to try and fight your case. Sir, as you said, a strong representation should move to the council. That IT should be given irrespective of the state. You see this GST council giving representation, Mr. Rajendran, I have my own views on this. This political, this giving this, in fact, the council is now greatly divided. Giving representation to them is like, rain on buffalo's back. You have to fight these things out. But you give a representation, nothing wrong. Mr. Rajshekharan asked the question, can a runaway in an airport be considered as a plant? See, there are case laws which say runaway is not a road. Runaway is not a road. But for an airport, without the runaway, it is not possible for planes to land or take off. It is not possible. So in my view, it is neither land nor buildings, nor is it a civil structure. It is a plant. It is an apparatus. Please take this, Mr. Rajshekharan. It is an apparatus. For airport authorities, for example, the Cochin CIAL, the runaway is a plant. GST returns relating to financial year 17-18 submitted after extended due date of filing annual return. While filing returns, assessee has taken input tax credit. Now the department asks to repay. Please challenge in appeal. Chances of success, in my view, very good. More conservative consultant will say 50-50. Definition of works contract contains 14 activities. 17.5c speaks about works contract when supplied for construction of immovable. Can we take the position 17c is applicable only to construction, not to 13 other activities contained in section 2 and 119? See, in 17.5c, they also talk of something else. They say, if I've read it carefully, they specifically say, the expression construction includes reconstruction, renovation, addition, or alteration or repairs to the extent of capitalization to the said immovable property. You can take this view, but here also under 17.5c and D, it is quite wide. Exporters are getting MEIS scripts, which is exempted from CGST. It can be sold without CGST. How to treat the value of MEIS for claiming refund of ITC and for adjusted turnover? In fact, it should not come there at all, in my view. In my view, it is neither it is not an exempted supply. I don't believe that a non-taxable supply can become an exempted supply automatically, even though 2(47) states so, definition states so. I believe what is not a supply at all cannot come within the clutches of 17(2) or 17(3). So there will be no need for you to reverse the credit. Works contract for private people, will it fall under residual entry? I have answered this question when I told you it cannot fall under residual entry. Even I used to think it was, but now I have my own feeling. Though my doubt is not directly related to subject matter of discussion. Yes, you have raised it. Composition levy, Mr. Soman. For the purpose of determining the tax payable by the composition supplier on the turnover in the state, the following can be excluded. Supply from the first day of financial year up to the date when the person becomes liable for registration. Question, is this exemption available once or for all financial years thereafter? And also each time the person opts for composition. If such person has registrations in more than one state, will this exemption apply to all states? If the registration is granted, for example, when the turnover in state 1 is 15 and state 2 is 6, will the exemption as per the applicable to both states up to 20 lakhs? If we look at this composition scheme, can you please tell me, Mr. Soman, when they talk of this turnover, when they talk of turnover, are they saying in each state?
Yes, sir. The explanation 2, can I talk, sir?
Yes, yes, please go ahead.
Yeah. Explanation 2 is commonly for section 10.
Okay.
Yeah. So it segregates aggregate turnover and turnover in the state. And for calculating the eligibility, for determining the eligibility, aggregate turnover is used. Once eligible, pay the tax based on turnover in the state. Okay. Now the explanation again goes off saying supplies from the first day of April of a financial year.
Yes.
Up to the date when such person becomes liable for registration. So two things are getting excluded. One is the from April to the date up to which he becomes eligible for registration. And second one, you can exclude the interest. Interest part is okay. Both are given together. Both are given together.
Yes.
So in the first explanation, in the first point, will that exemption is available on a financial year wise, because tax payment is based on the state turnover. That is frozen. That is correct.
Yes.
That is frozen. Yes.
There's no doubt on that.
Okay.
There's no doubt on that.
Okay. Then coming down to the second line, I have two branches, one in Kerala, the other one in Tamil Nadu.
Yes.
Aggregate turnover reached 20 lakhs.
Yes.
I opted for composition.
Yes.
By my turnover in Kerala is 15, my turnover in Tamil Nadu is 6 only.
So aggregate turnover as per definition is more than 20.
More. Yeah.
So you have registered.
Now I have to pay the tax on turnover in the state as far as Kerala and Tamil Nadu are concerned.
Yes.
In Kerala, I have to pay tax on 15.
Yes.
But I have not reached the level of my registration required in Kerala. 20 lakhs. So should I pay tax on that? And also in Tamil Nadu, I reached only 6 lakh. Still 14 lakhs is also there.
See, in my view, that registration requirement cannot be made the basis for payment of tax. That is my humble view.
Correct.
When you say 20 lakhs aggregate turnover, you must register. Yes, I must register. Yes, no doubt.
Right.
You are absolutely, I have to register. There's no problem. I'll register in Kerala. I'll register in Tamil Nadu.
Yes.
But when it comes to tax liability computation,
yes,
I cannot say because I'm registered under the provisions of 22, 23, 24, whatever it is, automatically therefore I become liable. I have my feeling that this interpretation which is being placed across the country, I have heard this everywhere. Everybody telling that once you're registered, you have to pay, you don't have option.
Yes, same thing, sir.
I can't understand this because liability to tax is completely different from your registration.
Exactly.
You have to go only by liability to tax in each state as far as composition is concerned. Otherwise, it will defeat the very purpose. Registration is done for the purpose of tracking the SSC, because on an all India PAN basis, you want to say how much this man's turnover is.
Yes, yes.
That is a different purpose. In my view, guest getting registration doesn't mean therefore you have to start paying taxes from day one. You have to go by section 10. If section 10,
yeah,
I will apply my mind again to this, but if I have read this carefully enough, section 10 on composition levy cannot be barred just because a person is registered in more than one state.
Yes.
And his turnover is much less than what is required for registration under that state.
Yes.
I completely agree with the interpretation that you are placing. I'm very thankful to you also because you always bring out some question, which appeals to my line of thinking. See, I have always taken this view that registration and tax payment should be different. You can't mix the two. But I'm finding more and more professionals telling me, once you register, you have to pay tax. I don't think that is right. I think what you are saying makes more sense.
Sir, that is the reason. And again, can I apply it on a periodical basis every year? Can I look back to the turnover of the state?
Well, see, it is like this. What you're trying to say is that up to that limit in that financial year, I should be out of this.
Yes.
And it should be that I will apply my mind and tell you,
yes, because it doesn't say the financial year. It
you
only
are right.
says yes
In
for a financial. Yeah,
in
correct.
a financial year.
Yes, exactly. That's the reason.
And it says in explanation 1, when you compute the aggregate turnover of a person, value of person made from first day of a financial year,
yes,
up to the date. So I think what you may say will make sense, because every year then I'll have to exclude this as a new year. This is a drafting error which we can't do anything about. Yes, you're right.
Yes,
you're absolutely. It's a very good,
very
good observation.
But I was not getting any answer so long. That is why I have tried to raise it at this point.
My answer, I think, supports what view you are taking.
Yes, sir. Thanks a lot. Thank you very much, sir.
Thank you, sir. Sir, whether filing of refund claim is covered under Supreme Court COVID orders. Now, filing of refund claim under 54, in my view, if you can call it a proceeding, yes. Otherwise, no. So you will have to, this matter will have to go to the Supreme Court itself to say whether proceeding starts when you file a refund claim or proceeding starts when you issue show cause notice to reject the refund claim. In my view, we should cover even all these returns and refunds, because you're not able to, if you're not able to do appeal, how will you file your refunds? So Supreme Court order should cover that also. As discussed by you, whether ITC can be claimed by hotel and shopping malls for construction of building. Miss or Mrs. Vidya, please try it. Lend your name to a famous case in Kerala High Court. Let Kerala High Court decide whether the input tax credit should be given or not given. Please take these cases to the High Courts, because these credit can be substantial savings for your client if the High Court, holds that it should be allowed. Sir, many times due to credit set-off pattern, we have first utilized IGST, then last SGST. If the assessor has mistakenly ITC 50,000, 5,000 and SG, now due to set-off pattern, 45,000 is utilized and credit is left in SGST. Can we reverse the 90 taken, etc., etc., etc.? Please, you do one thing. If you have made an error, there is nothing wrong in adjusting your ITC ledgers. Are you allowed to do it? You see procedurally. If you're allowed to do it, do it. If you're not allowed to do it, please file an application to the department asking that you have made this error and it should be done. No cash payment till that time. Sir, suppose a public sector unit has awarded a contract for works contract to Central P Works. Whether PSU is required to discharge GST under RCM. There is no RCM, I think, in this. To the best of my knowledge, I can be corrected. It is a forward charge only. There is no RCM on this. I can be corrected if somebody else can show me any notifications. Can an appellate authority reject appeal filed based on Supreme Court limitation order under GST? You cannot reject it because today Supreme Court says the limitation is continued. So you can't reject it. In continuation to Soman sir's query, can the assessee who is registered avoid GST payment till he reaches? I will have to check this out, but I agree with what Mr. Soman says. It reads like that only. It reads like that only. Once refund order is taken on appeal by department, they issue protective demand. Whether separate proceedings needed or SCN gets merged with appeal. No. See, this protective demand, I remember there is a Karnataka High Court decision which I argued in Dynamatic Technologies case, where I quashed the protective demand. But that is a separate proceeding in itself. Definition of advanced tax under TN VAT or GST is not available as available in income tax, then how to interpret? Nay, you see, there is a decision of the Madras High Court which said that the advance tax paid in TN VAT can be taken in GST as a set-off. There's a decision of the Madras High Court, Mr. Vignesh. I think I have covered all the questions. Now I leave it to Mr. Raman Pudi. or Mr. James to take over?
James. Either Sudhir or James. Sudhir is there.
Sir, there is one more question. Came, sir. What is the position when an assessee wrongly utilizes the ITC of IGST and this as SGST and CGST?
These adjustments can be done by the officers themselves. There is nothing wrong with you doing. If you have made a mistake, nothing wrong in asking for adjustment. In my view, it has to be allowed. If it doesn't happen, please go to the High Court. Madras High Court decision is Justice Anita Suman's decision. It is. Please look into the taxman. You will get the decision of Justice Anita Sumant, where she has specifically said this VAT advance tax can be carried forward and set off.
Is there any more questions? Then we can close the meeting, sir. So, Sudhir sir will propose the vote of thanks.
Sir, hello. Sir,
yeah, audible, sir.
On behalf of can I talk? Can I talk?
There is a disturbance on your voice, sir.
James, are you hearing?
Yeah. Now it is okay, sir.
Okay. Now we can hear.
Yes.
Okay. Sir, on behalf of the association, I would like to propose vote of thanks, and for you have conducted the session very intellectually, and it was really speaking an intellectual discourse to all of us regarding ITC. So the analysis of section 16 and 17 has really given a new understanding to us. And regarding the works contract and the new idea you have put through is really beneficial to all of us. And on behalf of the association and all the participants, I extend a hearty thanks to your presence as well as your discourse. Thank you very much. So
Thank you,
sir.
after that,
thank you, sir.
After that, it is a part entirely different from this session as well as this GST. I would like to ask you a question in VSP. Can VSP time limit is ending by 30th of this month? Whether this Supreme Court order can help us in that also?
In which one? Returns filing, huh?
Not returns filing, but the payment of taxes and VSP, of course, payment of the filing of this return also.
What I'm saying. So that is a matter of which I've told you. Interpretation on this. You have to.
It's a special act. It's a special act, sir.
It's not a proceeding under a special act, is what the department would tell you, because no proceeding has been taken by the tax authority. But in my view, because of the self-assessment provisions that are there, proceeding starts from that point. So please, you have to, this has to go to the High Court again. Whether filing of returns, payment of taxes, I am very sure payment of taxes, you're not going to get any relief. Because that would mean the government machinery will come completely to a standstill. They are not going to give you that. But filing of returns, you can take a chance. It is a good chance to be taken.
Thank you, sir.
Sir, hats off. Thanks a lot.
Thank you, sir. Thank you very much.
Sir, thank you very much, sir.
Thank you.
Shall we close the meeting, sir? Shall we close?
Yes.
Okay, thank you, sir. Thank you for every participant for joining.
Thank you.
Thank you, sir.